Let me ask you a question. When was the last time you used cash? I'll wait. It's probably been a while, right? Now think about how many times you've used your Visa card this week. At the grocery store, getting gas, ordering something online, subscribing to something on your phone. Visa is everywhere, and most of the time you don't even notice it. But behind every tap, every swipe, every click, Visa is making money. And I'm not just talking about some money, I'm talking billions of dollars consistently. And in this video, we're breaking down Visa stock, how it really makes money, how it's performed this year, how dividends play into it, and whether or not it deserves a spot in your portfolio. But before we get to the video, if you're new here and you've never seen my channel before, my name is Elliot and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, please consider subscribing. I upload videos just like this every 2 weeks. Visa's story started back in the late 1950s, when banks began experimenting with charge cards that could work at multiple stores. Over time, that idea evolved into Visa, a global payment network that connects buyers and sellers all over the world. Today, Visa operates in over 200 countries, processing billions of transactions every week. Visa doesn't issue credit cards. It doesn't lend money. It doesn't charge you interest. Visa's role is behind the scenes. It's the digital infrastructure that moves money safely and instantly from you to the business you're buying from. When you pay with a Visa card, a fee is paid by the merchant. That fee gets split between the bank, the processor, and Visa. Visa earns a small cut of every transaction, just a fraction of a percent. But when you process trillions of dollars in volume each year, those tiny cuts become massive. In 2024 alone, Visa processed over 15 trillion in payments. Visa earns revenue in a few main ways. Service fees, based on transaction volume. Data processing fees, collected for verifying and approving each transaction. Cross-border fees, charged when transactions involve currency conversion. Other services include fraud protection and security tools. Because Visa doesn't carry lending risk, meaning they're not responsible for unpaid bills, they can operate with very low overhead and very high margins. Visa's net profit margin consistently hovers around 50%, which is almost unheard of for a company of its size. Visa wins because it's deeply embedded into the daily lives of billions of people. More people using Visa means more businesses accept it, and more businesses accepting Visa makes more people want to carry one. Today, Visa has relationships with over 14,000 financial institutions, millions of merchants worldwide, payment processors, and banks across the globe. That's not something you can replicate quickly. And in a world where security and reliability matter, Visa is often the default choice. There are definitely competitors out there. Apple Pay, PayPal, Stripe, Square, and even blockchain-based payment systems. But here's what people often miss. Even when you pay with your phone or a third-party app, there's a good chance the card linked behind the scenes is still running on the Visa network. Visa is part of a financial infrastructure. It's already in place, already trusted, and constantly improving. They're also investing heavily in real-time payments, fraud detection using AI, blockchain-related payment tools. They're not waiting around for the future to show up. They're building towards it. No investment is perfect, and Visa does face a few risks. Regulatory pressure. In regions where governments are challenging how much Visa can charge merchants, government-run payment systems like FedNow in the US, which could create alternatives, large tech platforms potentially bypassing traditional networks, digital currency and blockchain networks creating entirely new rails. But so far, Visa has stayed ahead by adapting quickly and forming partnerships instead of fighting innovation. Now, let's look at how Visa rewards shareholders. They pay a dividend of $2.36 per share per year, or about 59 cents per quarter. That's a yield of around 0.66%. They've raised that dividend for 16 straight years, averaging around 14% annual growth. They also buy back billions in shares every year. As of mid-2025, Visa stock is up about 12.5% year to date. And if you reinvested those dividends, that total return would be higher. So while the dividend may seem small, it's growing fast. And when you combine that with price appreciation, Visa becomes a very solid long-term wealth builder. As a long-term investor, I love companies that quietly dominate without a lot of drama. Visa's not flashy, it just works, and it works everywhere. Whether I'm buying coffee, ordering something online, or traveling, it's Visa that handles the payment. That kind of consistency is hard to beat. Visa doesn't need to chase trends. It grows steadily, pays dividends, buys back shares, and keeps showing up in the background of everyday life. That's exactly the kind of business I want to own for the next 10 or 20 years. So, should you still consider Visa stock? Here's what you're getting: strong margins and free cash flow, a growing dividend, stock price up 12.5% year to date, even more with reinvested dividends, and a network that's been nearly impossible to replace. It's not the fastest growing stock, but it's one of the most reliable. If you're building a long-term portfolio, Visa deserves a look. So if you enjoyed this video, please make sure to give it a like, subscribe to the channel, and let me know in the comments below. What's your thoughts on Visa stock? And we'll see you next time.